I've read basically all of the trading books that everyone has recommended. We're talking Trading in the Zone, we're talking Market Wizards, we're talking Mental Game of Poker, we're talking everything. I have read basically all of them, and most of them talk about the same thing over and over again. And so today, I'm going to give you the most important lessons of these books, give you some examples, which is going to save you a lot of hours reading these books. And if you guys appreciate it, then make sure to drop a like and subscribe. I would appreciate it. I never asked for it, so please do like and subscribe. So my favorite trading books are The Reminiscence of a Stock Operator, Trading in the Zone, followed by The Mental Game of Poker, and last but not least, Market Wizards. Yes, from all of the trading books, I've boiled it down to 4, because all of the other ones, I think you can just get better information online, really. But let's talk about my favorite lessons of each of these ones. The Reminiscence of a Stock Operator. This book is about Jesse Livermore, which, if you don't know, has been one of the best traders that we've had so far in the world. But he blew up so many times, but it's extremely interesting to see all of the lessons that he took from blowing up so many times. And my favorite lesson, and it's also one of my favorite quotes, is stop trying to call tops and bottoms. Because what Jesse Livermore always was mentioning is that the first eighth and the last eighth of a trend are the most deadly ones. Why? Because you don't know when the downtrend is finishing until when? Until you see an actual good market shift that marks the shift of the trend. And Jesse Livermore was talking out of personal experience. He was constantly trying to call the bottom on a chart, and the market kept on moving lower and lower and lower, and he thought it can't go any lower, let me buy some more, and the market just kept on dropping. And the same thing with selling. He was constantly trying to sell the top, and the top kept going up. When he shifted his mindset and he stopped doing the opposite of, instead of trying to call the top, if a market is bullish, just keep on longing, and when the market is bearish, just keep on shorting, he saw a huge shift in his results and the monetary gain that he started to have. That was one of the biggest shifts in my trading, and that has been one of the things that has made me most profitable this year. This lesson of stop trying to call tops and bottoms is one of the most important ones for everyone listening. Now, point number 2 is don't listen to others, because every time that he listened to the tips of other people, it would throw him off his own game, right? All of a sudden, he thinks of shorting euro dollar. By the way, he wasn't trading euro dollar, but let's say you're thinking about shorting euro dollar and someone says buy. Not only now are you thrown off of your A game because you're thinking, well, this person is thinking about buying, so is there a reason to buy? And then you start overcomplicating your analysis. You start finding reasons as to why this person is right, when you would have been so much better off, especially in the long term, just trusting yourself and just go with your analysis. Yes, you might make a mistake. That is completely fine. As long as you follow your analysis and you learn when the analysis is done, when the results are in, you are always better off just following your instincts. Which then takes me to my next favorite lesson, which is learn from losses and mistakes. And basically, Jesse Livermore, he blew up many times. We're talking many times. He made millions and went to zero. He had a huge inflated lifestyle and still went to zero, but he always came back stronger. And one of the things that he always mentioned is that every time he would go back to zero, it would be an extremely important lessons that he would learn. And that is why every time that he then came back, he came back stronger. So one of the most important things for you to do is every time you make a mistake, let's say that you listen to others and you take a loss, or you listen to others and their analysis was right and your analysis was wrong. You can't change anything, and you shouldn't try to change anything. You followed your analysis, and that is the most important thing that you should do as a trader. That does not mean that you are going to stop learning. That simply means that you make a decision, you learn, and then you move on. So learning from mistakes is one of the most important things you can do as a trader. Point number 4 is be flexible and adaptable. Why? Because the market is always changing. And there was something that I was told by a performance coach still this year, which was I was always making a lot of money from trading NASDAQ, but FX was in this range bound period where it wasn't going anywhere. And this is where the coach basically said, hey, why not just trade both? Right? Why not put some more focus into this other one? Because your goal as a trader is to be adaptable enough to be able to trade multiple markets and then just profit from the easiest one. So for example, lately, it's been extremely easy to profit on trading the Bitcoin markets, the crypto markets. And so a lot of traders that were able to adapt their strategy into trading the crypto markets just were trading on easy mode. So being flexible and adaptable is very, very important in these markets. And one of the examples that the book gives is that in the 1929 crash, Jesse Livermore made a lot of money shorting the market, like a lot of money. He like flipped it into millions. And it wasn't because his strategy said, oh, short, short, short. He just simply understood, okay, this is the direction of the market and I want to capitalize it on as much as possible. So you need to be able to understand when the market conditions are shifting and shift your approach according to that. For example, in this past 2 quarters, euro dollar has been very trendy, either bullish or bearish. And while it was trading bullish, I was just longing. And then once we turned bearish, I was just shorting. That was my number one focus. While before, I would always be focused, okay, are we going to short or long today? Well, right now, I'm only focused on shorting because we are on a bearish trend. Until when? Until it shifts, I make a mistake, I learn from it, and I move on. That's all. So being adaptable is extremely crucial in the market, and Jesse Livermore basically constantly talked about being adaptable. And last but not least, on the reminiscence of a stock operator is don't follow the crowd. So you always see that happening, especially with crypto, is that every time we're at the top, that's when everyone wants to buy crypto. When everything is at the top, everyone is like, oh, how can I buy? How can I buy? That's when you know that you should close out all of your positions. And the example that is given in the book is, for example, in 1907 and 1929, the market had very big crashes. And in both of them, Jesse Livermore was able to make a lot of money. But in those 2 crashes, he took the contrarian approach because everyone was thinking the market can only go up, and eventually it came crumbling down. And because he wasn't following the crowd, he was able to make a lot of money. Now, Trading in the Zone is the book that everyone basically recommends. If you become a trader, you should read Trading in the Zone. It is the number 1 book. But let me tell you, when you are a beginner, I don't think Trading in the Zone is really that worth it because you're just going to hear some blah, blah, blah from a book and you won't really put it into practice. You won't really understand it. But once you're 3 years in, it's going to resonate. But Trading in the Zone, it focuses a lot on the trading mindset, letting go of the ego, thinking the probabilities, the consistent process, trading without expectations, and the fact that you need to have a process-based thinking instead of an outcome-based thinking. And in terms of the trading mindset, Mark Douglas, the author of the book, basically explains that the only difference between a successful and a non-successful trader is all in the mindset. That is the biggest shift between a profitable and a non-profitable trader, because most people approach trading with a fear-based mindset driven by emotions like hope, greed, and fear of loss. But when you are objective and disciplined, you increase your odds of becoming a profitable trader by a lot, which then completely goes with the point number 2, which is you need to let go of your ego. So the biggest thing between a profitable trader and a non-profitable trader is that a profitable trader doesn't have an ego attached to one single trade, to 1 month, to 1 quarter. It simply understands that over the course of a few years or even the year, they know that if the analysis plays out, good. If it doesn't, then it doesn't really matter. But ego-driven traders are constantly trying to be right in the market. They want to be right every single day. They don't only want their trades to be right, they want their analysis to be right, like consistently. My analysis has to be right. And that is one of the biggest issues that holds traders back. It's like they get emotional and they didn't even take a trade. It's just because their analysis was wrong. And I'm like, you didn't even take a trade. Why are you emotional? So letting go of the ego is one of the most important things that traders can do. And that is one of the things that Mark Douglas touches on Trading in the Zone a lot. Now, next one is thinking in probabilities, and basically it mentions that no single trade is guaranteed to win, but over time, if a trader follows a strategy with a proven edge, they will be profitable. And we basically can think about casinos. Casinos are highly profitable because they have a statistical edge. And for us as traders, we are basically calculated gamblers. And so you should be able to understand that no matter the probability of a trade, there's never going to be a 100% chance of the trade playing out. So you need to shift your mindset into a probability-based mindset. And that goes perfectly in line with letting go of the ego. Okay, I'm entering in this trade. This trade is high probability. It resulted in a loss. Well, that's fine. That's not really what I wanted, but given the fact that it's a trade, it can result in a win or a loss. I just have to accept it and you move on. That's what thinking in probabilities and letting go of the ego is. So make sure to always think in probabilities. No matter what trade you are entering on, you are never guaranteed to win. Now, point number 4 is that you consistently have to follow a process. So one of the big differences between profitable traders and unprofitable traders is that unprofitable traders are mostly focused on being profitable and making money, while profitable traders are just focused on consistently executing on their plan. That's the number one thing that they want to do, because profitable traders understand that if they just focus on sticking to the plan, thinking in probabilities, letting go of the ego every single day, that they will able to then continue being profitable traders. While unprofitable traders, they focus on the outcome. They're always like, no, this trade has to be a winner. No, I'm losing money and I want to make money. And so they consistently keep on losing. And then when they lose, they stop thinking in probabilities, and that is what makes them unprofitable traders. So can you see what trading in a zone is constantly hinting at? Listen, you can become a profitable trader. You just have to think different. Right? You have to let go of your ego. You have to think in probability. You have to think about the process. You can't let one trade define you. And that was one of the biggest things that changed in my trading. And then the next one from trading in the zone is trading without expectations. So one of the things that a lot of traders do is that they enter in a trade and they already know that it's going to be a winner. And again, what does that go against? It goes against thinking in the probabilities. Then because you have an expectation and that expectation doesn't play out, all of a sudden you have ego involved. So trading without expectations is the number one thing that you can do. And that's what trading in a zone hints at. It's like, listen, every time you enter the trade, don't expect anything. It's like, just let it be a loss. Entering the trade, expect it to be a loss. And even though a lot of people think, oh no, this is attracting losses. No, it isn't, because the market does not care about your feelings. It's not like looking in a mirror where what you expect to see is what you are going to see. In the market, it does not matter if you expect a win, it's not going to be a win. The law of attraction does not happen in the market. And so if you understand that every time you enter in a trade, you should have no expectations of what that trade is going to do, that is going to help you with all of the other points. And then last but not least, Mark Douglas once again was talking always about process over outcome, which basically says that traders should focus on the process of trading, not the outcome of individual trades. Success in trading is not about the result of any one trade, but about executing a strategy with a proven edge consistently over time. By focusing on the process, traders avoid the emotional roller coaster that comes from obsessing over whether a trade is a win or a loss, right? So many traders, they're so focused on making it, and that is why they are not being able to do it. So Trading in the Zone is definitely a very, very important book. I recommend you reading this maybe after 1 year of trading. I don't recommend you reading that as soon as you start trading. I don't think you're going to take value from it. And I know that it might be a controversial opinion, but it's true. I don't think you're going to take value from it until you are 1 year in, 1 to 2 years into your trading journey, because again, you haven't felt any of these things. But I really, really recommend it. So that is definitely one of my top books from trading. Next one is The Mental Game of Poker, and yes, I know that there's The Mental Game of Trading, and Jared Tendler is someone that now is very involved in the trading niche, but personally, I haven't read The Mental Game of Trading. So Jared Tendler started focusing on high-performance athletes first, then he went into poker players, and then last but not least, he went into the trading, and that's where we had The Mental Game of Trading. But a lot of the things are extremely important, and I have a total of 5 tips that I have from The Mental mental game of poker, and I think that they're all very, very important. So number one is take control of tilt, because most of the setbacks that we have as traders is when we start tilting. Because when you start tilting, meaning when you start becoming emotional, that's when you start entering in multiple trades, that's when you start over risking, that's when you start doing so many dumb things that you should not be doing, right? And so taking control of tilt is like one of the most important things that we can do as traders. And in the book, he says that the key to controlling tilt is self-awareness, recognizing the emotional triggers that lead to it, and having a plan to cool down before making further decisions. So for example, let's say you take one loss. If you take one loss, don't trade for the next hour or don't trade for the next 15 minutes, right? So you basically are pressing the reset button, and then let's say the next trade that you take, it's a loss, okay, move on to the next day. But understanding your triggers that lead to tilt, that lead into overtrading, that lead into over risking is going to be one of the most important things you can do. And I think that is a very, very important lesson in the book. Then in the mental game of poker, I was introduced into a concept that I really, really liked. And I actually was introduced to it through a friend of mine, because this was his favorite lesson and it was one that really, really helped me, which is A game and C game. So Tendler introduces the concept of A game, your best performance, and C game, your worst performance. And everyone has these different levels of performance. And the goal is to play at your A game more often and minimize how frequently you fall into your C game. So for example, not long ago, I was in a live stream inside of the Simple Trading Edge, and I was talking about how every time I enter in a losing streak, my number one thing that I want to do is increase the probability of the trades that I'm taking, which means I'm reducing the trade frequency because I want to get back into the flow. So imagine that your A game is when you are in the flow, when you understand where the market is going, when you are executing, when you have no fear, you're focused on the process, you're focused on just sticking to your plan. That is going to be your A game. And then your C game, that's when you are tilting, that's when you are over risking, that's when you are doing the stupid mistakes. And so it's important to understand that all of us have our A game and our C game, and the number one thing that we should be doing is identify your A game and the C game and do your best to increase the number of times you are in your A game and decrease the amount of times that you are in your C game, or decrease the mistakes that you do when you are in your C game. That's why, for example, when I enter in a losing streak and when I feel myself getting tilted, there's two things that I do. I either leave the charts or I just go into a higher time frame for the next coming days. And one of the examples is when you are in your A game, you're disciplined, patient, and following your plan. When you're at your C game, you're emotional, making impulsive trades, and ignoring your rules. And he explains that identifying the factors such as stress, fatigue, or overconfidence that push you into your C game allows you to address and prevent it, improving your consistency and performance. So that is one of my favorite lessons of the mental game of poker. To be fair, maybe I'm biased because that's one of my friend's favorite lessons, but it is what it is. Next one is the growth mindset. Every time that we are trading, we think that, oh, we've hit a plateau, that we cannot improve, that what is going on? We get into this victim mentality, this fixed mindset. We get discouraged every time we take a loss. We get frustrated every time we take a loss. We get frustrated every time we are in a losing streak. And switching our mindset into the growth mindset is basically thinking, okay, I took a loss. So what? We move on, right? This is just an opportunity for me to grow. That's all that this shift in your mind does. It's basically a shift between I made a mistake, I'm a victim, this is going to set me back for a long time, versus I made a mistake, I can grow from this, how can I learn? Right? Those are the big differences. And I really, really like this one because I see a lot of traders that when they make a mistake, they're like, oh my God, why did I make this mistake? I should not have done this mistake. It's like, well, it's in the past. There's nothing else you can do. And so that is what the growth mindset is all about. Now, the next one is develop confidence through competence. And this is basically about the fact that a lot of your trading psychology, a lot of your resilience in trading will come from you just putting the work in, for constantly sticking to your plan, for constantly adapting to the market, for constantly improving your skills in the market, for you to learn from your mistakes, for you to not blame yourself for the mistakes. So it takes time to develop confidence. And the reason why I like this lesson is because a lot of traders come to me and they're like, oh, I don't trust my edge. And I'm like, well, are you competent enough to execute on your edge? Is your edge even that big of an edge? right? Those are the things that you need to ask yourself. Then you've developed the competence on sticking to your edge and making your edge more profitable, and that is then going to give you the confidence, because a lot of traders are not even profitable. They don't have a profitable edge, yet they want to be a confident trader, and one doesn't really go with the other, because it's going to be way harder to be unprofitable and confident versus profitable and unconfident. And one of the things that is said is real confidence is built through the preparation and knowing that you have an edge over time. But first, you need to see that happening. You need to get yourself in a losing streak and then get yourself out of it. That is going to develop the real confidence, and that comes from competence. And then last but not least, I think this is one of the most important ones, and I started taking this pretty seriously when I started trading, which is trading like an athlete. Because in the mental game of poker, he basically compares traders with elite athletes. You need to have a preparation routine. You need to have a warm-up. You need to be able to be ready to execute when the time comes, right? So for example, any elite level athlete trains years and years and years for 5 minutes of fame, right? For 90 minutes of a football game, for 9 seconds of a sprint, right? It's years and years and years of preparation for one single moment. That will happen over and over again, but one single moment. And what does that mean for us as traders? It means be prepared. It means do the work that a profitable trader has to do every single day. Forecast every single day, backtest every single day, learn every single day, journal every single day, because that is what an elite level athlete would do. Right? So what is said is this means focusing on mental endurance, emotional regulation, and discipline, just like an athlete focuses on physical conditioning, technique, and strategy. Successful traders, like athletes, have routines that help them stay sharp. This could include regular mental preparation, reviewing past trades, practicing mindfulness, or setting goals to maintain focus and consistency. Because you need to treat becoming a high-level trader as becoming a high-level athlete, and you will see a huge shift in your trading. And I have this here because it was one of the most important things that I did in my trading, and I really hope that you do it too. Last but not least, we have Market Wizards. I really liked this book, and the reason why I liked it was because it kind of showed that there is no one way to trade. There are people here trading commodities, there are people trading forex, stocks, futures, everything. Like everyone in Market Wizards is trading something different. Some of them don't even look at charts, some of them only look at charts, some of them say that fundamentals is bullcrap, some of them say that fundamentals is the only thing that matters, right? So everything works. That was the biggest shift that happened when I read Market Wizards. I was like, oh, okay. I see the same thing happening on social media. These people are saying, oh, this works, this works, this works, this works. All of them made it work. And I'm like, well, no, that doesn't work. And I see traders being like, no, that does not work. Support and resistance doesn't work. Trend lines don't work. And it's like, listen, there are people making millions of dollars with trend lines, and we're saying it doesn't work. It's like Market Wizards will show you that basically everything works. What they say in Market Wizards, the first tip is that risk management is the main focus. No joke. The only thing that was common between all of these traders is that they said risk management is the #1 thing that a trader should focus on. No joke. All of them said that. All of them talked about the importance of risk management, because all these traders know that a loss is eventually going to come. The question is, how much is that loss going to cost you? Is that going to cost you your whole account? Is it going to cost you 5 years worth of work? Is that going to cost you 1 month worth of work? Or is that only going to cost you 1%? So risk management is something so crucial that so many beginner traders do not focus on. Then we go into the discipline and consistency, because again, you can't just come into the market and be like, oh, you know what, this time I want to do this, and I want to do that. No, you have to be consistent in your approach. And this is what was regular between all of these traders, which was all of them traded something different, but all of them did it consistently. They did not flip-flop, oh no, so now I'm trading this, then I'm going to trade that, then I'm going to risk 5%, then I'm going to risk 1%, then I'm going to risk 80%. No, it was always with consistency and discipline. That's one of the things that almost all of them always mentioned. So have a system and always follow the rules of that system. Tell you the importance of it, which is learning from mistakes, all of these traders had losses, all of these traders had big losses, yet what made them successful and what made them a market wizard was that they always learned from their mistakes. All of them had significant losses or setbacks at some point in their career. What sets them apart is their ability to learn from these mistakes, analyze what went wrong, and adjust their approach. Rather than being defeated by failure, they treat it as a learning experience. We've talked about this multiple times throughout this video, and this stays in all of these books. All of them talk about mistakes are a way to learn. And if that is something that is common between all of these books, then maybe that is something that you should change your mind to. Next one, which is second to last, is respect the market. So this comes into the ego. This comes into thinking, oh, the market just moves up. It's impossible that it keeps moving to the upside. And then they just start trying to fight the market, trying to outsmart the market. And eventually it just results in loss after loss. A lot of these traders, their biggest mistake was thinking, oh, okay, the market moved 100 points. It's impossible that it moves another 100. It's impossible that it moves another 200. And they all blew up because of that. And so respecting that the market does not care about you is one of the most important things that they mostly all of them talk about, really. And then this goes into the last one, which is knowing when to stay out of the market. And the reason why I really liked Market Wizards was because it gives you a complete perspective of actual successful traders. It's like, for example, Mark Douglas. I don't think he was a successful trader. Jared Tendler, he's a performance coach, but those are good for mindset. But then when it comes into real trading and real perspectives of traders, this is where Market Wizards is really good, and I really like the book because of that. And one of the lessons that they talk about is knowing when to stay out of the market, because a lot of traders think, once again, it goes back into the ego, it comes back from outsmarting the market, it goes back to so many things that we've talked about in this video. A lot of traders feel like the only way to make money is to be in the market, not understanding that being out of the market is a position in of itself. Why? Because let's say that now you're just sitting cash and the stock market goes down 20%. You've just made so much more money because you've got so much more buying power. With the same amount of money, you can buy way more shares of a stock that is going down or a stock that is then going to show you a market shift bullish. But you need to be able to understand that staying out of the market is a really important position in of itself. And so change your mindset. Drop your ego. You don't have to be in the market to make money from trading. And that is one of the things that I preach to most of the people that come to me for advice. So for example, very lately, euro dollar has been range bound. So what do? I just stay out of the market. I don't need to try to call if the market is going to move bullish or bearish. I just let it do its thing. And then eventually, when I have a decisive idea of where the market is going, I will execute. But for now, I'm staying cash. So I hope you guys enjoyed. Let me know your favorite book down in the comment section. Let me know your favorite lessons of this video or even the books that you've read about trading. So I would love to know what books you guys read, what your favorite books are. Leave a comment with this emoji right here so I know that you sipped through this huge video. Hope you took some value from this. Leave a like and subscribe. I would really appreciate it. And I'll see you in the next one. Peace.